Thank you to Ryan. Up next, we have Adam Richard. Adam is the CEO of Volt Markets, also the co-founder. Volt Markets is a company that builds simple, purposeful interactions to allow anyone to participate in renewable energy in order to obtain a more sustainable environment. Volt Markets is a financial market for carbon and renewable energy credits on the blockchain. The platform originates assets, certifies assets, tracks chain of custody, and facilitates transaction settlement that is real-time, secure, auditable, and scalable. Please join me in welcoming Adam.
Hi there. Ryan, thank you for that talk. I really enjoyed it. There you are right there. Thought it was quite interesting. A lot of stuff that we've been thinking about as well. So a bit about Volt Markets. There's 3 co-founders, myself, Dan, and James. And I've actually done some competitions in the same room as part of previous startups that I've been a part of. And it was a lot of fun, really enjoyed it. So I started the Houston Bitcoin meetup about 3.5 years ago. And I started the Houston Ethereum meetup with Tyler Smith, that's putting on the conference today. And Dan is a commodity and derivatives attorney. And James is an attorney as well, and has some experience in the carbon credit market when he was living in Australia. So a bit about Volt Markets. We went to Boost VC. We were in Tribe 8, went out to California this past August, and was out there for about 4 months. And when we got there, we really just had an idea. And so we had to develop our entire business model and take that to market and start building our technology. So we've come a bit of a way since then. We were originally focused on strictly renewable energy credits. And since then, we've evolved and really started thinking about a bigger picture. So primary energy sources consist of coal, crude, natural gas, biomass, geothermal, wind, hydro, nuclear, and solar energy. So thinking about all these sources and how they are consumed is a lot to think about. And they're classified as renewable and non-renewable, and their production comes at a cost that is not only staggering, but also growing at an incredibly fast rate. And the technology driving this industry has to stay on the cutting edge to compete. So right now, we're seeing solar and wind farms capable of producing power below that of the cost of coal, natural gas, and crude power generation. And this is something that's really new, and I think is very interesting and opens up a lot of opportunity. So this trend will create a paradigm shift in power generation development, and we're already seeing it happen in China, where they've allocated $360 billion to be spent on renewable energy infrastructure by 2020. And today's power market transaction volume will increase by tenfold over the next 10 years. So incentives for renewable power generation come in a variety of flavors, such as renewable energy credits and carbon credits. This shift means that there's an acceleration of the generation of these assets, and countries are taking them more seriously, as is evidenced by the Paris Climate Agreement. So at Volt Markets, we believe that carbon emission should be curbed and that everyone should do what they can to promote a more ecologically sustainable future. We're determined to incentivize power generators and consumers to adopt new technology in order to manage their power production and consumption. We want to empower companies and individuals with better security, real-time markets that are more liquid, with more transparency, more efficient reporting and auditing, and hardware compliance standards for greater interoperability. We're building a solution to accomplish this while focusing on how to drive faster ROI for renewable energy project development. So one of the biggest concerns, it's often first talking point when I'm speaking to anybody about blockchain technology, is whether it should be a private or public implementation. So the energy supply chain is so large that the blockchain solution provider must choose a use case entry point. And the ecosystem consists of power generators, wholesale markets, retail markets, transmission, distribution, and consumers. So depending where the blockchain interacts in the market and between counterparties, the regulatory frameworks will determine the degree to which control and centralization must be present. The advantage of a permission blockchain is that it's a walled garden where the rules are determined by the governance model. that is agreed upon by the managers and stakeholders. In this case, the trusted counterparties, business logic, compliance, reporting, and auditing can adhere to any set of rules. Entry to the permission blockchain solution is controlled by the stakeholder managers that dictate the requirements to enter. So this allows for oversight of compliance and ensures that all parties' identities are recognized, contractually agree to the terms of the system, and pay a fee or invest in an equity interest to participate. So it's also important to recognize that the fee to participate can also be controlled in a public implementation, just as we see how Ethereum uses Ether in order to participate in their blockchain. Using a public blockchain does break down that walled garden and opens participation to any party that wants to participate. So applying a public blockchain model to power markets is possible and is dependent upon the flexibility of those participants. So they'll need to come to terms with the fact that the processes and trust will be different than what they're used to. So the decision to participate in a public decentralized blockchain solution will impact change management, regulatory reporting, and auditing, and should be considered in how this will impact their business. But not all business is conducted in the United States, and so not everyone must adhere to these strict regulatory requirements that we have here. The blockchain ecosystem is diverse and global, where people dream of disruption in many different ways. This technology opens the doors to explore approaches to lead the energy transition at a global scale. So we've been asking questions like, how can a blockchain impact distributed energy resources and utility analytics? Can a blockchain create better efficiency for billing and settlement in the field of smart meters? Can intelligent control systems leverage a blockchain for data exchange between stakeholders and smart grid applications? How can smart contracts create more balanced markets and impact capacity markets, intraday trading, next day trading, and demand-side management? The answers to these questions are answered by the creation of applications that talk to the blockchain. So these applications can interact with the blockchain through smart contracts that are connected to intelligent endpoint devices. There will also be a need for a communication layer that can handle massive amounts of data related to the assets. As these systems interact, then we're able to create assets such as feed-in tariffs, a carbon market with a distributed registry, and create power markets for day-ahead and real-time trading. The development of this energy blockchain ecosystem gives us way to the exploration of new assets. And so we're excited to see new asset classes emerge from the implementation of a system like this. One of those assets which we're actively working on is analogous to the special drawing rights of the IMF. In other words, an energy SDR. So privacy and security have been one of the largest concerns we've encountered. And so the consideration of how a solution would implement with the existing smart grid and trading platforms has been a focus of ours. The current frequency with which the grid is monitored is pretty slow, and so speed is another thing that we're looking at. So fortunately, companies like Consensus are building applications like Infura and Uport to address these concerns. Leveraging open source technology and the communities around those technologies ensures that systems are secure and adhere to the expectations of network participants. In 2016, power companies were just becoming aware of blockchain technology, and in 2017, those same companies are now becoming educated about the technology and are showing an interest in building POCs and field testing use cases. So we see the adoption of blockchain technology in this industry going through many phases, but the first one is having the conversation about how this will impact your company and competition. So we've been exploring blockchain technology and how that impacts feed-in tariffs, real-time load monitoring, consumption forecasting, transactive grid settlement, and ultimately creating a global market for power and derivatives. The implications of a global market are exciting to us because it's never been done before, and so we're looking at how we can create something that's never been seen before. These goals are a long-term vision and guide us in how we build today. We know we cannot disrupt an entire industry overnight, so we're focusing on energy attributes, Renewable energy credits and carbon credits are plagued with problems, and blockchain technology can solve almost all of them. So there's two markets for RECs and carbon credits. There's a mandated market that Ryan mentioned earlier, and the voluntary market. The mandates for companies and utilities to offset their non-renewable energy consumption with renewable energy is growing at a very fast pace. So the origination of these commodities are slow. Markets are not real time. There's problems with double counting. There's a lack of security and almost no transparency for auditing. So as these mandates and transaction volumes grow, it's going to require a more advanced technology infrastructure that's connected, transparent, and secure. With a blockchain solution, we can remove the need to trust all users and operators of REC and carbon credit tracking systems. We can create real-time auditing and reporting tools with a simple UX and UI, and is capable of executing trades between counterparties and enable auditability of the provenance and transfers with transparency. The technology exists to implement a REC and carbon credit solution today. And as I mentioned earlier, we're not only building for energy attributes, but the entire power supply chain from generator to consumer. And we're actively building POCs, and take note that we are keep an eye out for some big announcements that we'll be releasing in the next month. So I can take a few questions if you guys want to ask anything.
How do you incentivize the essentially the emitter side when it's not a regulated law?
How do we incentivize the what side?
So, like the retirement side
Mm-hmm.
of the carbon credit projects, the emitters, to onboard and purchase the credits that essentially create if they're not obligated to do by the government.
So how do we incentivize the voluntary market, right, to participate in the carbon credit markets? Right. So the incentivization to participate would be that you are able to originate an asset that you wouldn't have had otherwise. And in an open market, the value of that could be additional to what you would be deriving from any existing infrastructure and regulatory participation that's required.
It's an asset for the generators, right? Like those
Right,
products that produce it.
right,
But then it's essentially a liability for the emitters to acquire from the site, correct?
right. As you're talking about the emitters. We still need to figure that out. That's a difficult one. Yeah.
It's not detailed stars and rating.
Yeah.
The various segments of all things.
Yes. All right. Thank you, guys.